QuickBooks Pro Plus Desktop 2022 OneNote presentation. Purchase of furniture and investment transactions. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions 7040, purchase of furniture and investment transactions. Also take a look at the immersive reader tool, topic introductions in the text area as well. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give introductions to the topic, give screenshots, links where applicable, provide accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're starting out with a screenshot of the home page. Looking at the trial balance next. In prior presentations, we put money into the business. Often the way it would happen when a business is started or expanding, money coming from the owner and or a loan. Now that we have the money in the business, we're going to purchase things that we hope to generate revenue with, that being furniture and equipment and inventory. We're also going to think about where to park some of that excess cash on a temporary basis in things like stocks and bonds or something like that, short-term investments. We're going to go into the check register to do this. You could use a check form to do this, but I think it's better or easier oftentimes to go into the register. So I'm going to go to the list drop-down chart of accounts, double-click on the register. We're then going to be going into Vanguard. That's who the investment company is going to be in our mock problem here. We're going to be putting $12,000 in as a payment from the checking account. The other side going to a short-term investment account, which is not yet set up. We're going to set it up like this, making sure up top we have it going to not an expense account, but other current assets. Short-term investment is the account name. Going to look like this once it's been put into the check register. If we actually double-click on that check and go into it, it will actually be using a check form. This is the expanded check form with the expenses down below, the information up top. Note it's obviously a little bit easier to enter directly into the check register sometimes. Then we're also going to be making a payment for office supplies or furniture and equipment, depreciable assets. We're going to be paying to Office Depot, which we will set up as a vendor as we go into the register and make another payment. It's going to be $16,000 going to Office Depot. The other side going to furniture and equipment, which is a fixed asset account, not an expense account, therefore hitting the balance sheet and not the income statement. If I went into that check, it would look like this in its expanded format. And if we go to the balance sheet now, we've been spending some cash and we're focused down here on the furniture and equipment. So we have added furniture and equipment, and we also added that short-term investment, parking some of our cash there for the short term. Then we're going to go back and add some more furniture and equipment back to the register here, purchasing from Amazon this time, going to be $7,000. Again, the other side just going to furniture and equipment. This probably being the fastest way to do that data input. The checking account now down to $105,000. We've got the asset of short-term investment of the $12,000, and our furniture and equipment is now sitting at the $98,000. Notice we did not expense those items even though we paid cash for them. We will be expensing them in the form of depreciation, allocating the cost of the purchase over the time period in which they benefit. If we took a look at this from an accounting standpoint, look at the journal entries. These are our starting balances. We would have that first one, increase in the short-term investment would be a debit, and the other side going to credit, decreasing the checking account. That made the checking account go from $140,000 down by $12,000 to $128,000. This is just basically a mock kind of example to see these types of transactions here. Actually, this is kind of following along with our actual practice problem, I should say. So we're going to be, that brings the $12,000 in the short-term investment. If we look at the GL, the short-term investment goes from 0 up to $12,000. We had $25,000 in the checking account. In prior presentations, it went up by $65.50 up to $140. Now we decreased it by $12,000 to $128,000. Then we purchased furniture and equipment from a debit and credit standpoint. That would be a debit to the furniture and equipment and asset. The other side going to the checking account. So checking account for our two transactions now at the $28,000. And the other side going to the furniture and equipment. Notice no impact on income statement accounts on down below. We don't have any income statement accounts yet because we haven't posted anything to them yet We're getting cash in the company, using that cash to buy the assets that we hope will help us generate the income. So that gets us to the 91,000 furniture and equipment. Furniture and equipment was at 75, increased by 16 to 91, and now our cash balance was at 128, went down by 16 to 112. Then we made another transaction purchasing the equipment, debiting the equipment by 7,000, crediting cash. Cash now changing by that 35,000. Equipment now changing by the 23 up to that 98,000. Still no impact on the income statement. Revenue and expense accounts down below. Equipment was at 91,000, increased by 7 to the 98,000. The checking was at 112,000, decreased by 7,000 to 105,000.